Welcome back to Alpha Recap. Glad you joined us after the close. Today we're breaking down a pretty bifurcated market day and what drove the winners and the laggards. As always, if you have questions, you can reach us at stockalpha.ai.
Yeah, lots to cover. So what really stands out here is the split between AI and crypto-led strength versus old line industrial pain.
Right. Markets close with a clear rotation. Growth areas tied to AI, tokenization, and regulatory wins outperformed, while capital-intensive industrials and some materials names took hits.
I mean, when you step back and look at this, it didn't feel like a broad melt-up. It felt more like selective buying into secular themes and headline-driven money moving around.
Exactly. Quick headline set. Bitcoin popped, tech names linked to AI were strong, clean energy developers scored big financings. And then you had this huge profit shock out of a major steel name that rippled through materials and industrials.
Let's unpack those main threads. First, AI and tech. That was the gravitational center today.
Analysts pointed to continued hyperscaler GPU demand and enterprise AI adoption. Foxconn's strong quarter was explicitly tied to AI demand. So the whole hardware to cloud chain was getting flows.
Right. And the other thing is you could see that across categories. Semiconductors, cloud service names, even real estate tied to data centers picked up momentum.
Which makes sense. If companies are spending on AI compute, GPUs and data center capacity follow. Watch GPU inventory and hyperscaler CapEx hints as early demand signals.
Quick reaction. So far, that was the story of the winners. Now crypto, big day there too.
And the number that really caught our eye. Bitcoin climbed past $82,000 after the Senate advanced the so-called Clarity Act. That legislative progress, plus product moves like tokenized money market funds, getting an institutional grade rating, pushed flows.
Yeah, Moody's giving tokenized MMFs a top rating, and a CFTC no action letter helped. But remember, security incidents were still in the tape. So while flows sped in, operational risk didn't disappear.
Exactly. Analysts are saying regulatory clarity begets capital flows, but operational security remains a real constraint. So you get headline rallies that can be fragile.
Let's pivot to clean energy. That was another leadership area today.
Utilities and project developers saw big financing activity, about $901 million and about $500 million in reported deals. Canadian Solar, for example, doubled a Texas line to 10 gigawatts, which signaled strong project pipelines.
So the project finance markets were open for sponsor-grade deals. But you had a contrast. Developers found capital, while some clean energy manufacturers were announcing job cuts.
That's an important bifurcation. Development and project finance can be robust even while component makers face cost and execution pressure. So it's not a uniform sector story.
Okay, time for the bad news bucket.
Yeah, industrials and materials were weak. The headline that reverberated was a nearly 95% year-over-year profit plunge at a global steel bellwether. That really put a scare into machinery and downstream suppliers.
Honestly, I was a bit surprised by this one. A near 95% hit in profit is not a small miss. It changes near-term sentiment for the whole sector.
And that ties into the S&P 500 technical picture. The index flashed a new technical sell signal, which analysts warned would alter positioning and raise volatility.
Yeah, that tracks.
So what did we learn about macros and policy? Kevin Warsh won Senate confirmation for Fed chair, which reduced one uncertainty but shifted focus to how the Fed will signal on rates and liquidity going forward.
That's right. Confirmation removed some headline risk, but it refocused markets on forward guidance. Analysts expect Fed signaling to be a key driver for rate-sensitive sectors like finance and real estate.
Speaking of finance, the tape was mixed. Regional bank consolidation chatter, targeted regulatory moves, and mortgage improvements tied to AI and servicing all showed up. Real estate deals closed and lenders reported faster processing thanks to AI.
Which is a reminder, technology isn't just a sector theme. It's an efficiency lever across industries, from mortgage origination to operations in real estate.
Quick sound bites, short reactions.
Big move. Crypto and AI leading.
Industrial pain, deep and sudden.
Project finance still working.
Let's break down the biggest moves and why they mattered. Bitcoin we covered. Nippon Steel's near 95% profit slump was the single company shock that weighed on materials. And the large utility and clean energy financings showed capital was available for big projects.
Also notable, some real estate M&A closed, and lenders said AI cut origination time, which suggests secular gains for firms that integrate tech.
Analysts flagged a few cross-sector themes worth repeating. AI as a gravitational center, regulatory clarity unlocking flows, clean energy bifurcation between developers and manufacturers, geopolitics acting as a price multiplier for energy and materials, and the interplay of technical signals with policy.
Yeah, that was the day in 5 themes. If you keep those in mind, you can better interpret what headlines mean for flows versus fundamentals.
Now, some accessible explanations for listeners who want the takeaway without the jargon. When we say regulatory clarity begets capital flows, that basically means if the rules around something are clearer, like for crypto or cannabis, institutional investors feel safer allocating capital, which pushes prices and product adoption.
And when we talk about a technical sell signal at the index level, that's a chart-based warning that momentum traders use. It can change how strategies are positioned and increase correlations across different stocks.
Good point. Also, project finance being open means banks and investors were willing to lend or invest in completed deal cash flows, which is why utility-scale developers could get nearly $901 million and about $500 million financings.
Right, and that's different from manufacturers looking for working capital loans. Project finance is often long-term, non-recourse, or limited recourse money tied to a specific project, so it behaves differently under stress.
Let's hit the actionable insights. Informational and non-personalized. First, monitor flow and positioning around AI hardware and cloud compute. Watch hyperscaler CapEx commentary and GPU supply.
Second, use policy milestones as catalysts, not anchors. A bill moving in Congress can create momentum, but the actual implementation details are what matter for sustainable revenue.
Third, protect against earnings shocks in capital-intensive sectors. The steel example shows earnings can flip fast, so watch backlog, guidance, and input costs pass through.
Fourth, for renewables, track financing spreads and partner credit quality. Big headline GW numbers are useful, but financing terms and offtake strength tell you whether projects are viable.
Fifth, keep an eye on liquidity and technical indicators at the index level. The S&P 500 signal changed how some strategies behave today.
And finally, in crypto, keep security risk front of mind. Regulatory progress reduced friction, but hacks and operational incidents can still produce outsized drawdown.
Quick sector-specific things to watch next. For tech, monitor export decisions and CPU, GPU supply. Crypto, legislative calendar and ETF flows. Utilities and renewables, interconnection news and offtake deals.
And in industrials and materials, watch order books, backlog realizations, and tariff headlines. For finance, digest Fed commentary closely. For real estate, lease velocity and AI-related demand for data centers.
Before we wrap, a few risks to keep on your radar. Policy implementation divergence across states versus federal rules. Geopolitical flare-ups that could reprice energy quickly. Execution risk in capital-intensive projects. And market structure risks tied to liquidity and technical selling.
Hold on, say that again?
I said, the key risks. Policy misalignment, geopolitical shocks, project execution failures, and liquidity-driven correlations from technical selling. Those could all flip today's winners and losers pretty fast.
Yep, that's why things felt so selective today.
All right, let's finish with clear takeaways. 1. The market was bifurcated. AI, crypto, and project-ready renewables attracted capital, while parts of industrials and materials were punished for earnings and execution issues.
2. Regulatory headlines matter. They enabled flows into crypto and moved the cannabis narrative. But operational risks and implementation details still matter a lot.
3. Watch technical signals. The S&P 500 flash changed positioning and will likely make volatility and liquidity more important near term.
And 4. Evidence-based positioning. Focusing on cash flow visibility and operational resilience was the analyst's takeaway for handling this kind of market.
Quick reminder, this episode is for informational purposes only. We're not recommending buying or selling any security, and this isn't personalized investment advice. Analysts note trends and risks. Use them as context, not instruction.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch you next time on Alpha Recap.